Welcome, good evening. Welcome to a closing bell for week ending 21st of March 2014. It has been a very interesting week because we have the US FOMC. Janet Yellen just came out 2 nights ago, first saying that they will taper off excuse me, the quantitative easing, which is up to 55 billion. What does that mean? It simply means that inflation is coming, interest rate about to go up. So at that point, Janet Yellen also said, look, there's likely to raise interest rate, and that is going to have an impact to the stock market. As such that the market actually fell deeply, more than about 188 points. And then the following day, I was told by Bill that Janet Yellen came out, said that look, all this about raising interest rate is still under pretty much of our wrap. It is not in our best interest to see that businesses suffer because of interest rate, but we all know that this is because due to Janet Yellen being subjected to President Obama direction to not disturb the boat. That's right. The whole point is not to disturb the boat, so we will see higher US Dow Jones for the coming weeks. So what does this mean if you translate this to the Malaysia scene? And we have our bank governor that came out 2 days ago on the Bank Negara report saying that our country is much stronger now to weather any crisis, and we will not raise interest rate. Okay, because the interest rate raising has been the mind of many investors and fund managers like ourselves, because any time interest rate is raised, that is going to put a damper to the construction and property sectors, as well as also to overall business. Yes, banking stock will improve because of the interest rate, but again, interest rate is normally rising or do rise not because of inflation, it's because of better economy. Okay, better economy. But as you all know, many countries including Malaysia have so much debt. Remember, Malaysia is 86.9% of our GDP is also in construction and debt. Anytime when the interest rate is raised, that will be a problem. I'm sure most of you know, and a lot of our premium members in here are also property investors like myself. Anytime when they raise interest rate, that seems to be very bad because your cash flow is going to get squeezed and likely lower down your yield. Am I correct? Right? Just type yes or no. So far, what I said is true. Okay. Is my sound coming in okay? Right. Just want to do a sound check. All right. Let me know. Okay. Good. Yes, that's right. All right. All right. So this is the scene that we have painted in here. Having said that, interest rate will currently still be maintained. So that is why we are still seeing a lot of pressure on the REITs. Real investment trust funds. They has gone up a bit because of anticipation of possible not raising interest rate, and at one point they raised interest rate not. So this thing is been overblown, and yet our REITs for Malaysia has been badly beaten down since the outflow of the foreign funds that we seen last June 2013, and since then the market has recovered. This is partly to the yield, which you are getting at 6 to 7% if you buy a lot of the REITs now. Definitely one of them is CMMT, Capital Mall Trust. Alright, let's get on to the scene today. Pretty good one. Yesterday we had a rally about 100 Dow Jones. We have a rally about 108 points, 0.6%. So that has caused the market to somehow push up. Gold has definitely took a beat after reaching almost $1,400, and subsequently for the 4 days it has fell almost $70 due to the QE tapering, meaning there will be less US dollar in the market. Gold will definitely take a beating. But if you look in the scheme of all things, the debt is still out there. Okay, ladies and gentlemen, the debt is still out there. People is still being so all right, good. So what we're going to see here now is definitely all green here, and let's move on to last week. Now last week we were at a panic point. Remember, if you all recall, we were here Friday, and I did mention, look, it's very important that the market cannot break the 1795. Okay, it should not break the 1795 180, because when it does break, this looks very bad. Because if you see in the scheme of things, let me just show you what I see here. All right, what is this? Can you all see this? Okay, what does this look like? This look like a H. Now let me just erase this again. 1, 2, 3. So this is a shoulder, head, shoulder. Ladies and gentlemen, this is not head and shoulder shampoo, but the head and shoulder pattern. Okay, so head and shoulder pattern is one of the bearish pattern, as I said before last week, after talking to Benny Lee, who is one of our best market strategists with Jupiter. So you can see the market did hold up, and we have this beautiful two-bar reversal. Since then, market is pushing higher. Notice the low in here is getting lower. So at one point in time, the market will try to push back up to 1830, 1840, and we are coming to a very tight narrow band, as I explained this morning in our first posting around 10-11 o'clock. So we might see a sideways push from in here. What we want to see is SOS in the next few bars in here. Hopefully we get an 18-day line change, and that's what we hope for would be the best. That what we hope for will be the best, and then you'll see a new retest back to 1840. Okay, so typically that's how market works. We want to see all those things coming in there, and if we do get it, that will be definitely great. Okay, so let's push on to what we want to see here. Okay, now moving on to the next in theme is the FBM 70, which is a small and mid cap stock. Again, very strong, holding its position in here. I don't know whether it will hold or not, but from the looks of it, it seems to be holding pretty well in here at around 13,000.